everyone, and welcome back to the Fast CPA Consultant YouTube channel. Today we're tackling a critical topic that affects many taxpayers: IRS debt resolution. If you're dealing with the tax debt, penalties, or have received IRS notices, this video is for you.
Yes.
To guide us through the options available and how to resolve tax debt effectively, we have our CPA, Fulton Abraham Sanchez. Welcome, Fulton.
Thank you. It's a pleasure to help people understand how they can fix the IRS the problems with the IRS. But we're here to help you, so you are in good hands.
Let's start with the basics. What is IRS tax debt and why is a serious issue?
It is a problem because of the consequences of having an IRS debt problem. The root of all these IRS debt problems come from the delay in filing tax return. That's the main thing. So when you have this problem with the IRS, it's like you are giving power to the IRS to look into your records and also to review the content of your assets. And based on that, the IRS is going to put you a penalty, interest, and you are going to receive that terrific letter that terrorizes people, and they are going to be in worry, not only because of the letter of the IRS that they receive, but also for the situation that creates for your assets, for your money, because now the IRS is going to ask you to pay not only the debt or whatever you owe, plus the interest and the penalty.
The risk of accumulating IRS tax debt.
As I said before, the main candidate to accumulate IRS debt is the person who doesn't file taxes. I've seen cases that from taxpayers who come to us with problems like this, they have filed taxes in a row 3 to 4 to 5 years. In some cases, up to 5 years. And because it's a problem, 5 years in a row, I've seen debts 50K, 100K, 1,000 because of this accumulation of debt. So it's two instances. The first one is the not filing of the tax return, because if you do not report your income, the IRS is not going to know about your report. But the IRS does have the forms that your employer, if you work as a contractor, 1099, that is a report of the income. If you had an unemployment income, the IRS also receives a form. If you have income from earnings in gambling, the IRS is going to receive all that. And sometimes 1 year, 2 years are going to pass, and the IRS is not going to do anything because you have not filed a return. But in the third year and the fourth year, the IRS is going to send you a letter. We have not received your tax return. The problem is that you have passed 4 years, let's say 3 years. So you have 3 years that you have not paid your taxes, and for those 3 years, now you're going to have interest and penalty. So that is the root or the cause of the problem of owing money to the IRS. It's mainly not being able to file taxes on time.
What options are available for resolving IRS tax debt?
The main solution is to create a payment plan, but that only works for people who own money at the personal level. There are instances, for example, business owners who do not pay payroll taxes, meaning they withdraw or they withhold the payroll taxes from their employees through their payroll. This is when they do payrolls in-house. In the US, there are 2 ways to do payroll. In-house, meaning you do it by yourself, or you hire a company that processes all the payroll. That company doesn't forgive. The company reports to the IRS, you have to give that money to the IRS. But if you report internally in your business and you do not turn that money to the IRS, this is for Social Security, this is for federal taxes. If you withhold that money and you do not pay to the IRS, there is no payment plan for that. I would say that's for businesses. This is for businesses, in different from not filing taxes. For businesses, that is the main reason or the main cause of problems with the IRS. When the business withholds taxes, federal, Social Security, and Medicare, and does not give these taxes to the proper institutions, and the business keeps this money, there is a huge problem for the business, because now it owes to the IRS. Is one. Second, the employees, they have filed their taxes and they have claimed a refund, but because the business has not given that money to the IRS, then the refund claimed by the employee is not valid. So there will be no refund. That's one. Second, there will be no money available, money contributed for the Social Security on the employee. So it is a good idea that when you are working for someone and the person does the payroll in-house, you make sure that you request to the Social Security that your contributions have been given, because if the employee is retaining, is withholding this money, but is not providing it to the IRS and to the Social Security Administration, you are not going to have money for refund or for retirement. And I've seen cases like this, and the IRS does not forgive. There is no payment plan. I was talking in the previous point about payment plan to solve the problems, how to solve the problems with a payment plan, but that is basically for individuals. For companies that owe money through withholding payroll and federal income tax, and they do not give this to the IRS, there is no payment plan. The IRS goes against the business and against the assets of the business. There is also the case, for example, self-employed people, consultants. They work based on 1099, and they don't file the report. Whoever is given a 1099 is going to also report to the IRS, and the IRS is going to find out. In that case, if the self-employed individual is able to file their taxes, the IRS can also provide them with a payment plan. That will be the first recourse, payment plan for individuals. The payment plan only works for individuals. Businesses owning either federal income tax or Social Security tax with contributions withheld from the payroll of the employee, they have no payment plan. They go through a process of auditing. They are not able to pay any asset that they have, even personal assets. The IRS is going to create a lien against that employee and against the business. There are cases that I have to be very, very emphatic in this. We have to stress this very well, because there is a case where people believe that filing an offer in compromise, your debt is going to disappear. But what I say always to anyone coming to our office, to our firm, saying, we want to file an offer in compromise, is the first question I ask is, are you broke? Because this only works if the person is broke. An offer in compromise, you say the IRS, you propose the IRS, you're going to pay based on a criteria that the IRS has, a long form that the IRS provides. You're going to say, I'm going to pay this amount based on the calculations of the form. And the IRS is going to ask you, but that's only possible if you are broke. If your income does not cover your expenses, then you are not able to pay the IRS debt. You cannot do an installment agreement, because there is no, you don't have money. So the IRS is going to say, okay, we accept your offer in compromise. And the first question that the IRS is going to say is how you are going to pay if you have no money. So you have to give a credible information, information how you're going to pay, who is going to fund you, you are going to borrow from someone, and the IRS needs information from that person. So this is a very strict criteria when the payment plan does not work. This is only for individuals. Companies do not have offer in compromise or any kind of payment plan. Businesses, incorporated companies, LC, S corporations, C corporations do not have payment plan. There is no payment plan for the taxes that they owe. they have to pay it all, or the IRS comes against the assets of the company and many times against the assets of the individuals. When the companies are, for example, when the assets of the business are not enough to cover the amount of the debt. And we've seen cases like people come to us to try to solve the problem with, but at that point it's not possible to fix it because there is no payment plan for companies. Payment plans are only for individuals. Same thing, offering compromise is only for individuals. But again, the IRS is going to say, how are you going to pay the amount of the debt in the offering compromise? So you have to have a credible source that's going to fund you, is going to provide you with the money to pay to the IRS, because at that point, if your debt is $100,000, the IRS is going to say, okay, this is just an example. This is only an example. Let's say, okay, we accept 10% of the debt. How are you going to pay? Who is going to give you your money? So if you're not able to pay your expenses, how do you pretend that we believe that you are going to pay $10,000? The IRS might accept 2 payments. I think that even 3, but 2 is the maximum. So you have to be prepared who is going to borrow that money. You cannot say, I'm going to borrow from the bank because you're broke. No bank is going to give you money. You can say from a credit card, well, yeah, but you're going to have like, how much interest? How much interest you want to pay? 24%? So you have to be very careful when you are going to present a solution for the IRS. There's also two more things that you can do. If you are broke, you can request what is called a suspension of your debt. The IRS is going to suspend for 10 years your debt in something that is called currently non-collectible, and provided that you in 10 years don't have income that justify the payment of that debt, the IRS is going to keep it like that. After 10 years, the debt is forgiven. But this is you are really broke, meaning you have no income, you have been fired, and you can prove that to the IRS with a statement. The IRS, for offering compromise and for this currently non-collectible, the IRS is going to request bank statements at least 6 months for the offering compromise, at least 6 months to prove that you're broke, that you have no money. If you are not able to prove that, then the application will be rejected. You will lose your money. So do not believe that anybody who is encouraging you to produce an offering compromise, to present an offering compromise that is going to be accepted. If you are not broke and you have some money left, the IRS is not going to accept it and you're going to lose your money. Second, whenever you are dealing with the IRS about debt, you only qualify people to act before the IRS are enrolled agents and CPAs. Anybody else cannot talk to the IRS on your behalf because it's not licensed, it's not registered, it's not authorized. CPAs are licensed, enrolled agents are registered. That's why they are enrolled agents. They are agents enrolled with the IRS to help you before the IRS. They can act before the IRS, same thing as CPAs. CPAs can also talk to the IRS on your behalf. Anybody else is not a good option to help you with the IRS when you're debt with the IRS.
What happens if someone ignores their IRS tax debt?
The first thing that the IRS will look into if you are ignoring an IRS the payment of your debt is, do you have a property? If you have a house, and you don't pay your debt, the IRS is going to put a lien on the house, and it means that lien will remain until whatever comes first, until you pay your debt. Remember that when you don't pay your debt, interest and penalties are accumulating. So whatever is the earliest event, either you pay to the IRS or you sell your house, and when at the closing, the title company will send that money directly to the IRS from the funds that you receive from your sale. Keep in mind, if the house is mortgaged and there is not enough cash to pay for the taxes that you owe, you will be left with nothing because that money will be sent to the IRS and you will receive zero. So it will be like a sale of the property, but you are going to receive zero. So make sure that you, before doing any kind of sale of your property, you have problems with the IRS, you are at least in a payment plan, and the IRS accepted. There is no offering compromise that will wipe out your debt, or at least a huge portion of your debt, a large percentage of your debt will be wiped out. There is no, when you own a house, there is no offering compromise or currently be non-collectible because you are not broke. Broke is someone who is renting and does not have enough money to cover their expenses, either living expenses or financial obligations like credit cards, car debt, etc. So that's the concept of bankrupt is not that you are in the street. The concept of bankrupt is that you're not able to fulfill your financial obligations, pay your debts, and you don't have enough money to cover your expenses. That is the concept of being broke. Bankruptcy. So if you have a house, you are not bankrupt. You are not in bankruptcy because you can sell the house and you can get some money. The IRS takes that as a bait. So there is no, you can do an offering compromise. Remember, offering compromise is at the individual level. You can do an offering compromise, yes, as an individual. But if you have a house, you cannot have an offering compromise. Worse, a currently non-collectible because you have assets. So make sure that whenever you have assets and you owe to the IRS, you do whatever is in your power to pay your debts with the IRS or to have a payment plan, and you are paying that to your taxes to the IRS in a monthly basis. Sometimes when the debt is over $25,000, the IRS is going to require that you pay with a payment plan that you pay. No, I'm sorry, $50,000. It's required that you pay with direct debit. Meaning that you will not be able to submit a check. The payment plan will have to be, the money monthly will be withdrawn from your account.
CPA and consultants help taxpayers resolve their IRS tax debt.
I was talking about the different options that any taxpayer can use for reducing or for solving problems with the IRS. Worst case scenario is that your passport is taken, is revoked. Meaning, if you owe to the IRS over, I think that is $59,000. When you owe to the IRS that money and you are traveling and you come to the airport from your trip from another country, the Homeland Security Police will withdraw your passport and you will be able to enter to the IRS, to the US, but your passport will be revoked, meaning will be withheld. To avoid all that, and you have the funds to pay to the IRS, we will always suggest do a payment. The IRS is going to accept it based on the amount that you have. Maybe you don't need a direct debit from your account. If the money is over $50,000, you will not need it. You will pay monthly. But the main concern here is that you need to be, if you are not able to pay to the IRS, you need to be in a payment plan. That's the first thing. The second one is, as I said before, is an offering compromise. But we are against offerings compromise that are not going to be accepted because we have a fiduciary, we have an obligation with a client or the prospect to avoid. This is why we are licensed, and this is why we go to the university, and this is why we go to take the exams at the board of accountancy, because we are the obligation to protect the assets of the public when they file. I'm sorry, to protect the public, not the asset of the public, because we are not asset protector. To protect the public against things that they don't need to do. If you don't have enough weight, if you are not able to prove to the IRS that you are broke, that you have no money to to pay your debt, then there's no reason to do an offering compromise. I know of other marketing companies that they say you are going to receive forgiven, blah blah blah, but it's not like that. We have rejected many people, and this is our concern. We have rejected many people because they don't have the qualifications. We don't know if they are going to somebody else and file it, but we only accept cases that are a large possibility, a large probability of being accepted. Otherwise, we are making people waste their money and their time. We had a case, for example, of a client. She came with us with that problem. Now it's a long time client. She came. It was the case of innocent spouse. Her husband, and this is another way how you can also get into debt with the IRS. Her husband has filed taxes without her knowledge. She didn't know. She was not aware of what she was signing, and for 3 years this happened. When it was something happened with the husband, and she came to realize that she was indebted with the IRS. So the first thing that we suggested is apply for a forgiveness because of the innocent spouse. So with that, this is a very special situation. This is not for everybody. So she applied for innocent spouse relief. The IRS didn't forgive all of the years, but forgive 3 of the years. And she obtained relief for, it was a large amount of taxes that she was indebted because her husband didn't pay taxes on time. So she was not aware of the situation. She claimed innocent spouse relief, and she didn't pay 3 of the years that the IRS was requesting her to pay. So that is a very special example of a case that we had, and it was a successful case because we knew that it was in reason beyond doubt that she will be forgiven at least a number of years out of the ones that the IRS were requesting to pay. But that is an special circumstances. This is not because she did not file. This is because her husband didn't file, and she didn't know what's going on. But that's an special circumstance. It is always for individuals. Always is for individuals. The payment plan. The sooner the better. But remember, the genesis of all this, the beginning of all this is the not filing the forms. You have to be very careful when you are not filing, because you're gonna hit with a big tax bill. We have one case of a client. He was broke. He filed for the forgiveness, and after 10 years, the IRS, currently not collectible, after 10 years, the IRS forgave the debt. Payment plans, we can help them with payment plans to the individuals. We can help with offering compromise only to those cases that are high probability of being accepted. But remember, when you do offering compromise, you need to have money from someone who is going to give you the money to pay the percentage that the IRS will require. It's not that I present the offering compromise and then I'm done. No, you have to pay a percentage, just a number, 10% of whatever you owe. The currently not collectible, this is a very special case. Maybe you can even apply for retirees who have no income, only Social Security income, and they have an amount of debt for a number of years that they have not paid. If they can prove to the IRS that their income only covers the living expenses, and they have no more income, it's a possibility that they can be accepted as that.
Let's go over some frequently asked questions. What qualifications are needed to apply for an offering compromise?
The IRS has a questionnaire, and you have to put your income, your expenses, your assets, and your liabilities. And if you own any real estate, or if you own real estate, there is no offering compromise. If you do not own real estate, based on that form, it's a form with calculation, the IRS is going to tell you, yes, you're accepted. There's a pre-qualification form that we can put that here in our video in the link. There's a pre-qualification form that if after entering all the information, the IRS, the form will tell you, yes, you are a candidate for presenting your offering compromise. So that is like 100%. Well, I will not say 100% assurance. That will help you to determine if you qualify for the offering compromise. But the main thing is, remember, as I said before, the IRS is going to require 6 months of financial bank statements. If on those 6 months you're able to prove that you have no income beyond your expenses, or even less, the IRS is going to accept your offering compromise. So the first thing will be that you are broke, meaning you are not able to pay the taxes. You can cover your expenses, living expenses. I've seen cases that even for support to child support, even child support is allowed. It's allowed as an expense within the offering compromise, and it was accepted. So it's the main thing is, can you prove that you are broke with 6 months of bank statement? If the answer is yes, then second, go to the application to determine it's a pre-approval or no it's a pre-qualification to the offering compromise. Based on that information, if the IRS determines on the form that you are a candidate for offering compromise, it will come the result. This tool is very useful because once you do it, it's a long form. It will take 30 minutes, probably 45 minutes, based on the knowledge of the information, based on the knowledge that you have and the information that is requested. So I would suggest you can go to this video, click on the link if you plan to do an offering compromise. But remember, if you have income, don't even consider it because you have income. This is only when you really have financial hardship and you want to fix and you want to present the IRS with an application. Second, remember how you are going to pay whatever the IRS is going to give you as a compromise. Compromise means that you offer something, 10%, 15%, whatever the percentage of the IRS deems good based on the amount of the income that you show.
Can penalties and interest be reduced?
Yes, they can. The only problem is you need to have what is called reasonable cost. What is reasonable cost? Reasonable cost is that your place was flooded. All this flooding, for example, in North Carolina, or your place was burned, like in California. Those are reasonable costs. Or that was I say fire already, that you suffer such an accident and you went hospitalized in the hospital for a number of days. That will also work, but you have to have proof, especially if this is a national disaster and the government has recognized this as a disaster and the IRS has even provided relief for tax deadline. That will be a good reasonable debt, a reasonable cost. Anything that is not reasonable cost will not fly, will not stand in court. The IRS will not accept it. So make sure you have reasonable costs like the ones we have mentioned. We have seen that in other cases that, for example, and this applies mostly to companies. When companies file late a return, companies like S corporations and LLCs, they have even corporations, they have what is called first time abate. This is only one time. This is for the first time, and if in the first time they have never had this problem before and they file their taxes late, and they receive a letter from the IRS. The penalties for the late filing will be abated, meaning they will be forgiven for the first time. This is only for companies. For individuals, the only way to forgive the interest, the penalties of the individuals, is through reasonable cause. Reasonable cause, what is reasonable cause? Reasonable cause is fires like in California, flooding like in North Carolina, for example. In any other case, there is no abatement or penalty for individuals. For companies, it's a little different. Companies who file late their tax return and they have penalties for late filing, if there is the first time, the IRS will forgive that with a phone call or with a letter. We can help you to do that. We have fixed clients with those problems. This is because clients comes to us after the deadline, and we have not been able to file an extension. For our clients, we file extensions in February, well in advance of the March 15 deadline for companies, and April 15 for individuals. So our clients don't have that problem. But if you have, we have clients who come after March 15 for S corporations and LLCs deadline filing, and this is the first time they have this problem. We prepare a letter, we send it to the IRS, and the IRS forgave us for company.
Is it possible to stop wage garnishments and bank levies?
Okay, garnishments, these are for individuals. Garnishments are created when the individual is not paying their debt with the IRS, and the IRS has exhausted letters. The individual has no interest in paying their debt, so the IRS goes and reaches the employer of the taxpayer and request to the employer of the taxpayer who owes the money to the IRS to withhold at least 10% in a monthly basis for the amount of the and that amount to be sent to the IRS. So in a monthly basis, the payroll company or the company who is processing the payroll is going to withhold 10%, and that money is being paid to the IRS. This is for the life of the debt, even without offering compromise. But it's not advisable because you are not covered. You have no terms with the IRS. So how do you get out of that garnishment? You can present to the IRS a offering compromise. I'm sorry, a payment plan. So you present a payment plan, you get in account with the IRS, and that will help you to, and you pay, meaning that you are paying, that will be able to stop the payment through the garnishment. So the garnishment exists because there's no payment plan in place. So payment plan in place, you can get rid of the garnishment. In the case of the lien, well, levies are as you were asking, levies are when penalties. Penalties are assessed because of not paying your taxes. At the individual level, penalties are not forgiven. Liens can be withdrawn. Remember, a lien is is an obligation that the IRS puts on your property, on your real estate property, because you are not paying your taxes or you have not paid your taxes. So how do you get rid of that lien? You file an offering compromise. You can also file, you cannot file, no, I'm sorry, you file a payment plan. You cannot file offering compromise if you owe real estate. You can only file a payment plan. So please keep in mind that one of the ways to get rid of the lien on your property is coming into terms with the IRS. You establish a payment plan, and you start paying and honoring the payment plan. The IRS will be able to withdraw that lien. In the case of levies, as was the question, levies are imposed. Levies are penalties. And penalties are imposed when you don't pay your taxes or you do not file your taxes. That's something else. The debt amount can be compounded not only for the taxes that you are not paying, but also for the tax return that you have not filed. So those are the two main sources of IRS debt. In addition, there are penalties. There will be the penalties for not filing and the penalties for not paying, and there is also interest. So penalty for not paying and penalty for not filing plus the interest plus the IRS debt, all that compounds your debt, and the interest is going to grow. The interest is going to make your debt grows and grows and grows. So make sure that to avoid the growing of your debt, so the debt grows and grows and grows. To avoid that, you have your payment plan in place, and you file all your tax return, even though you cannot pay your tax return, your tax amount, the tax debt you cannot pay. File your tax return, and once it's filed, determine the amount of the debt. File a payment plan, and with that, at least you are in control. Not filing your tax return and you owe money and not having a payment plan, you have no control, because the IRS will file a return for you and will impose the amounts that the IRS considers. That's another problem. For if you do not file your tax return, and you have left years to pass, the IRS is going to file a return for you, and based on the IRS estimates, without any expenses, without deductions, the IRS is going to give you the highest amount of taxes, and you have to pay that. If you are not able to pay and you have a house, the IRS is going to put a lien in your house. The IRS is going to put penalties, interest, those are the levies. And if you have no property, the IRS is going to come after you. What they're going to do? They are going to withdraw. They are going to kidnap your bank accounts. That will be the first recourse of the IRS. The IRS is going to come after you. You have no house, fine. Come to take over your bank account, and it will be kidnapped. It will be gone. Then, even though, if that is not enough to cover your debt, and you have a house, the IRS, you own the house, the IRS is going to come and put a lien in your house, and you will not be able to sell it unless you pay with the product of the sale to pay to the IRS.
Thank you for all this helpful information, Fulton. Any final advice for our viewers?
The final, the thing that I have help when we help clients. One of the things that we realize is that many times the client doesn't know about the consequences of not filing a tax return. That's why I'm thinking in the times when we have fixed a problem. We have the case of a client. She owed, it was like 2018, 2017. She owed $439,000, but she didn't know why she owed so much money, and she didn't file a tax return. It was a very, very complicated situation. Her relative died, family in another country died, so she was very, very shocked. So she didn't have any mind to file a tax return. We help them dearly. We have a YouTube, it's in Spanish, we have a YouTube testimony. We help the client. It was just a matter of filing a tax return and putting the correct numbers. Other firms, they were charging them a lot of money. We wanted to help them, and it was a very good experience helping someone in that situation. So the main thing, or the recommendation that I will give them is do not ignore your obligations. If you file your return, even if they are late, well, you have to file them on time, because otherwise you're going to have penalties, levies. Even if you file them late, file your tax return. Otherwise, you will have no control. You don't know what is your position, where do you stand. So it is very important that you fulfill your obligations with the IRS in terms of reporting, even though you do not have the money to pay your.
That's an excellent advice. If you have any questions about IRS debt resolution or need professional assistance, leave a comment below. or contact us directly at fa@fastcpaconsultants.com. Thank you for watching, and we'll see you in the next video.
Thank you.
Thank you.